All right, what's up, everybody? I am here with Dan the man. I don't know, there's a rumor, could be from Pakistan. So, Dan, Weston, are you indeed from Pakistan?
No, from the great state of New York.
New Yorkistan, all right.
Yep.
A listener, Steve, clued me in and said that you had your own YouTube channel and you were running an experiment with options, which we'll touch on in a bit. But
Mhm.
I didn't even know. I've seen you in the comments for live streams and some of the videos, and then I was like, lo and behold, he does have a YouTube channel. So what the heck possessed you or made you want to start a YouTube channel and get into that?
All right, I'll try not to swear here. Basically, a lot of the fiascos during the lockdown with there was some certain YouTuber. You want me to call out people?
Hey, so,
Basically,
man, whatever the heck you want. I
so
don't care. Go ahead.
I
Go for
watched
it.
I watched Meet Kevin basically self-destruct. And I've been investing for 20 years. So like I was bored at home. I mean, I was working a lot for the government, but I was kind of bored during lockdown. Got it in all these YouTubers online. And it's just like it was just nonsense. Like a lot of what he was saying about investing was nonsense. And I'm like, I don't know what is going on here. Why are they investing in all these unprofitable garbage companies? Because I can
Like, what did he say that? What did he say that was nonsense? Do you
just
remember?
like the way he presented some of the stocks during the lockdown, the way he analyzed these companies, he would do like TA, then he would do some sort of financial breakdown. He would like, I could tell he was just trying to cover every type of investor, and it was just kind of just to appease the crowd and get more views. And I thought these are very risky companies he's telling people they should buy. I kind of thought maybe I found some people I could latch on to I thought were better investors, the people I hang out with now. I kind of just did it as like an ancillary to like the two people I hang out with the most. I consider myself like a supplement channel. Like if we want to just cover something smaller topic or make fun of people, I don't know.
Well, hey, you know what, man? That's the beauty of it. It's your channel, and if you don't have sponsors and all that, we're free to do whatever the hell we want to do. And it might not always be the smartest thing, but so do you remember what stocks me, Kevin, pushed? Because I know somebody was big on Tattooed Chef, but I think that was Jeremy, right?
That was
That
Jeremy.
was Jeremy. But do you
It was
remember
like
which one's
Lemonade,
Kevin?
then it was he like some real estate mapping company. Then he pumped he called a firm like the Tesla of finance, which it's just a glorified payday lender, basically. Buy now, pay later. Lucid.
BNPL.
I
That
got
always
big
got me
problems
with
with Lucid.
BNPL. Like there was this newfangled thing,
Yeah.
BNPL. I'm like a credit card.
I have big problems with Lucid Motors. That it's not a real company, and he pumped that too. Just all this nonsense. His calculations of how big Tesla was going to grow. Like I'm not even joking. He was calculating 50% growth for Tesla for like a decade. And all these videos are gone now. You cannot find them. He deleted it all. So I wish I had saved it. I didn't save a lot of this stuff. It's a lot of
Oh,
nonsense.
dude, yeah, that's not cool. You got to leave that
No.
stuff up there. But dude, you said 20 years, so that's you got a lot of investing under your belt. So what got you started? I mean, tell us a little bit about your investing history and all that.
I have a video of like the first bit of time. I was going to do my whole investing, but I just did the first part. I haven't done the next. I started when I worked at McDonald's in high school. Then they had stock buying. So it was like I put in 50% and then the franchise would put 50% in. I think it was something like that. So I'm like, well, that's a good deal. And I think the stock was like, I keep thinking it was like $19 a share. This is like late 90s,
Yeah.
something like that. I can buy a share of McDonald's for like an hour and a half of my time.
How old are you?
41.
I thought you were going to be older than me. It's getting harder to find that. I'm 40. I'll be 47 in April. But so you were at McDonald's in the late 90s and 90s.
Yeah, I worked there for like 4 years, high school.
What happened to those shares? Do you still have them?
Not all of it. I kept buying it. Like I didn't know anything about investing. The first 10 years was just like buying things I touched, like almost like Peter Lynch style. Things I could see and tangible, like Pepsi and McDonald's and Home Depot, maybe something like stuff like that. Stuff that I dealt with, I would buy shares of it.
You still got those from the 90s? Because that would have been fantastic. Boring, it's not exciting.
I have most of it still. Like I've taken some of it and sold it for stuff for fun. So vacations and yeah.
The yield on cost on those has to be astronomical. I mean, are you in any of those situations? Because I have some fantasies, right? And we'll keep it to investing. And one of them is when I'm receiving annual dividends, or even quarterly is even better. You want to talk about ultimate fantasy when the annual dividend is more than my initial purchase price.
It was funny because someone asked me what my yield on cost was, and I'm like, I don't know what you're talking about. Like a few years ago, I don't know these things until someone brings it up, like investing terms. So I looked it up. I'm like, oh, okay, I get what you're asking me. And I think my yield on McDonald's is like, it's gotta be near 20%. It's like 15 or 20%. I think it was last time I looked at it.
Dude, that's awesome. There's investors I've heard, and it's crazy. People that Chris Bloomstrand, he was on the Acquirers podcast, and he was talking about when they first started picking up Costco, that the Costco special dividends are now more than they paid for the shares. So they've like recouped their money many times over. I'm just like, I think he said their cost basis on Costco was something like $14 a share. And I'm just thinking that's crazy. Then it was over 1,000 now. So what do you do for work?
I am a government audit I run an audit unit, I guess.
So is it like accounting?
Yes.
Okay.
So I'm part of the state agency. We handle I think it's like $2 billion of grants between state and federal. So I'm one of the regional supervisors. I have a team of auditors, and then we go out and make sure that the money is being spent properly, which is an interesting time to say that with the government. But
oh, dude, yeah. So how would that work with DOGE, the whole Department of Government Efficiency? If you're listening to this, you're not in the United States. The whole Trump administration has this. They're trying to cut waste, fraud, and abuse and all that. Are you like on their side then? Are you favorable? Are you guys worried about any cuts or losing, your job?
There is risks of our federal contracts being cut, I suppose. Like anything could be cut. It's just a problem what Elon's doing. It's like Elon's going through the government. He's just like breaking stuff, right? He's moving fast, breaking stuff like a Silicon Valley guy, like he is. But now it's like, that's not how government works. So now the courts are stepping in, and now like the rule of law is starting to reverse a lot of what they've done, because the government's not Silicon Valley. The probationary people are going to come back. Some of the agencies they cut are going to get reinstated. So it's a very odd time to live through this.
Yeah, Accenture Networks, ticker ACN. I read an article that they're one of the first companies that might be like, I don't know, they called it a casualty. It was a CNBC article I read. Their stock dropped like 7% because they announced that a big chunk of their government contracts are apparently going to be canceled. I think allegedly, I could be misstating something, but yeah, so they got hit hard. Then there was a couple other sympathy plays or sympathy investments, stocks that also lost value.
I would be careful of owning any consulting type, or for like military defense, let's say, there's some of these defense companies are very exposed to like consultation, Pentagon type contracts, not actually building the stuff that goes boom, let's say. So like Leidos, you could see if someone looks at a chart, Leidos holding, they got pretty clipped too. And then the one you said, Accenture, Booz Allen, Hamilton.
That's the other one. Yeah, Booz Allen, Hamilton.
It's tough. Like it's a tough space to invest in. You kind of have to, I've been telling people like invest in the things that go bang, right? Because those are the things they're probably going to try and spend money on, not like an IT infrastructure contract for the Pentagon.
So what do you mean when you say go bang? Like what, like Lockheed Martin or something?
Yeah, yeah, the actual weapons would be where I would be focused on. Yeah, I do a lot of military investing with Capital Mindset. I've done some pitches on there. It's one since I'm military like you. So
oh, no kidding. What were you?
National Guard. So I was in for like 10 years.
So Dan and I haven't really, this is the first time we've ever talked. So I wanted to tell him like, oh, it's kind of like a step above the Boy Scouts. How cute. So in the military, there's like a brotherly rivalry type thing, and like we would call the Air Force the Chair Force, and when like Coast Guard, when we're talking about the Coast Guard, we would call them like the Junior Navy, like the Boy Scouts of the Navy, like Pee Wee Navy, like all this stupid stuff. Thank you for your service, though. Seriously,
I had to go to Afghanistan, and it was like, man, it was like 20 months, just like the prep. Going the after, it's like it was almost 2 years of time, so it was an interesting time to go during 07, 08.
Again, anybody just listening, like I'm not giving them shit for it. I'm
we talk shit to everyone, that's fine.
Yeah, I guess if you're in the military you understand, but when you're outside looking in, you sometimes don't get it. What are some of your favorite investments right now then, if you can disclose that, or Yeah, make
The
you breach
most
of contract and have Elon coming after you. But
So like about a year ago, I had pitched in our investing group I'm in, Curtis Wright, because I could see when you look at the budget, the DoD budget, you see the priorities of the government, the spending. They tell you what their priorities are. I could see submarines are still a priority of spending, and it's going to be more important in the future. Just be quick about this. Like, I didn't want to invest in the shipbuilders at the time, though, because they weren't a pure play on subs. So then I looked at the suppliers, which is tougher because you have to go through DoD contracts. It's a little tougher. I found Curtis Wright, which supplies valves and fittings to the new submarines they're building. And at the time, it's just like they're going to be building these subs for the next 40 years, basically. The newer attack and ballistic submarines. I think the Virginia and the Ohio. So they were just ramping up on that. So I got in and I heard people tell me it was expensive. I'm like, I don't know what they mean expensive. This company has such a great runway with these new submarines fittings. So I got in at like 190, and I think Curtis got up to almost 400 recently. It's dropped a bit. It's one of my favorite. But I have also a drone defense company. I don't want to talk about it because it's very small and I'd be nervous to tell people about it. But
no, that's fine, man. That's fine for the 17 people that'll.
Yeah.
We don't want to bump and dump. But yeah, I can't think of it. And I don't want to. I think there's two submarine builders.
Mhm.
I think General Dynamics is one. And
Huntington
the other
Ingalls.
is Huntington Ingalls, right? Ticker HII. And they've taken a bit of a hit too. So I
just got into that stock. That was the other one. I was hesitant at the time, and it's a different thesis now. I have a guy on my channel, Bacon. His name is Bacon Memes, like a co-host. So he brought it to my attention, and we both are aware of the priorities of Pete Hegs. I mean, you can look at what Pete Hegseth has said in the past, and Trump about shipbuilding priorities. It had taken a beating at the time we looked at it. It was like 260, and it had dropped, I think, to 180 at the time. So we got in. Their last earnings was not rosy, of course, but then he said Department of the Ships at his State of the Union address or whatever it was a month ago. I think that is a good investment. It's an interesting investment at this time. The problem, the management of Huntington Ingalls is terrible. You're investing in a company with an amazing runway, one of the modiest of companies in America, right? There's no more dockyards we're building anytime soon, but like the management can't get out of their own way. I have to bite my lip when I buy them, kind of. I'm like, well, nothing's perfect.
You bring up a couple good points. That no investment is perfect. There's always something that's potentially on the horizon or something. But you remind me of the Buffett quote, the famous Warren Buffett quote that, you should look to buy or invest in a company that an idiot can run, because one day one will. So it kind of sounds like, and I've never looked at HII and their management, but they've come up on live streams. Curtis Wright was brought up recently. And so what insight do you have that you can share with everyone? Why you speak so lovingly of their management team?
If you listen to Huntington's calls, they don't have good answers for when they struggle. When I do invest, like, I'll listen to management before I look at their financials, because I want to hear what they're saying. I want the spin before I can see what they're actually reporting. They kind of give this, like, they fluff it, like why they're having troubles. I don't know. Like, I don't believe them. And then you can also look at certain investing boards, say similar things about their management. They blame turnover and boomers retiring for like employment issues. But it's like, it keeps going and they don't have a solution for these things. It's like, well, what do you do all day? You've identified a problem. What are you going to do about it? And I get the problems, but they're not like addressing it yet. I think I'd rather a solid foundation of a company. Like, if that management turned over, I think it'd be an amazing opportunity potentially. Look at what 3M happened. And what I think could happen to Boeing when you have a turnover to competent managers.
Yeah, I mean, management is a real thing that some people can overlook, and it's kind of crazy because I was at a birthday party this weekend, and somebody just happened, they don't realize what they brought up Starbucks, and they didn't even know the names. They just said, yeah, I read how the old Starbucks CEO wasn't very good, the stock price tanked, then the new one came in and it went up. And I was like, yeah, it's management teams are very, very important. I mean, right, they're the ones that are going to grow, they're going to handle your money when you invest in a business. So HII, that's interesting, man. I as a Navy guy myself, I've had them on the radar, but it makes me think, and I don't know if you feel this way, that Well, I'm just stupid to say. The market hates uncertainty. So when there's uncertainty, like with Nike or with all these, Elon running around with Army of Dead style, shout out Ash, like
Yeah.
chainsawing everything. So anyway, so is that any other favorite ones you got?
My last big buy was British Tobacco at like $29. I bought an air conditioning company. It's kind of doing okay right now, but
It's not Comfort Systems, is it?
no.
Ticker FIX. Somebody brought that up in one of our live streams.
Comfort. Okay.
Yeah, Comfort Systems, ticker FIX, and I put them on the radar. They look pretty good, but I haven't gone much further than that. So those are some of your radar stocks then.
Mm-hmm.
So I also had heard from the listener, Steve, viewer, listener, watcher, that you're running some kind of an options experiment, the wheel strategy. Everybody knows I'll dabble with options. I get in these, I vacillate. I'll be like hardcore into them, and then for whatever reason, I get away and I don't do anything with options for many months. So tell us, Dan, what do you got going over there with your wheel strategy experiment? And remember, there's going to be a lot of beginner investors here. So options, if it sounds like gobbledygook and you aren't understanding it, don't worry, because it took yours truly several months to get the fundamentals and the nuts and bolts hang of options. So what you got going on? What you got going on?
I noticed the last few years on YouTube, there was a lot of these channels that just started doing these selling put strategies. So like they always talking about how it was like free money and like you're just collecting your premium farming and stuff. Terms like this, which kind of set off red flags for me. I looked into like, what are they talking about? They don't all run the wheel, but some of them just like will sell puts. And
you want to explain the wheel right quick?
The wheel though, like, so you start off, you sell puts on an asset. So an ETF or a stock, you keep selling the puts until they get exercised. When they get exercised, now you have to buy the shares, whatever the strike of what the puts were. Now you have the shares. So now you start selling calls until you get exercised and the stock goes away, right? And you get money back. And then you just start again and you just keep going in a giant circle. The idea is you just keep collecting premium and you just keep running it just keeps moving. So I'm like, okay, well, what if I just try this because this could be something I could do in retirement. I don't know why you do this investing, but for retirement purposes, let's run this experiment of I'm a retired guy and I'm going to do this for, premium to live on. So that's how I'm doing this. So it's not as an investment.
Okay. So you're just running.
I have a paper account. So I am running it through Thinkorswim's paper account. So.
Okay. Well,
I keep having people ask me if it's real money. I don't know how many times I have to say paper account. So why would I experiment with my own 200 grand? But
yeah, I mean, people don't understand. Like I was just going to add in there that an options contract, every single options contract is for control of 100 shares. You either have 100 shares and you're selling a covered call, or you're trying to buy 100 shares. So just always remember that when you hear option contract, at least in the way we're talking about it, it's for 100 shares. So some people get kind of tripped up on that, but yeah, a lot of people, they don't, a lot of beginners, they don't know these terminologies. And I see it too, where, be on X and people say like, I made $12,000 in option income, like crazy free money boosted. And you know what? There's a cost to everything. And I don't know if you've heard me tell my story with JP Morgan. I was doing a little bit of options with them in a retirement account. And I remember they were $109. I bought 100 shares, so $10,900. And I sold a couple covered calls. It started going up and I collected the premium, it expired. I kept my 100 shares. I did like 2 or 3 times. So I probably made in total, maybe like $200 or $300 on those. And I was thinking like, I'm smart. Dividend came in and hit. And then the one time it exercised, it was around $120 was the strike price. So JP Morgan closed over $120. The shares got called away. So I had $12,000 in cash. Well, I tried selling a cash secured put, right, for like 118 or something to get them back, but cheaper. Never hit. The amount of money I had was, we'll say I had like 14,000 in cash, which, was 100. Well, anyway, but it went beyond the amount of money I had to sell a cash secured put on the shares. And it just kept going up and up and up. And now we're at like, I think I saw at one point JP Morgan, it was like $230, $225 a share. Oh. I was just like, wow. So if I would have just bought the 100 shares at $109 and did nothing did nothing. Just let them sit there. I would be at least, I don't know, $10,000, $12,000 further ahead. But hey, I got like $300 in premium and then like another $100 in dividends. So smart guy, right? So that's just a little tale that people might not always talk about that, right? So have you run into anything like that?
Yeah. Well, I've always used options as a tool, like as in investing. So it's like it gives you, control of 100 shares. So let's say maybe you don't have the cash or you don't want to put the capital to buy 100 shares, but you can get control of a contract. What's nice about that, then it gives you decision making, right? You're stretching out the horizon of information. So if you buy like a 1 year out option on Micron, you now can attain that year's like you can get more information because you're not buying it at that set point. And then in the future, you can say, oh, I like where they're going, and you can exercise at the same price as if you would have bought it. So that's how I've always used options. So this whole using options as a tool to generate income, like when I saw this like a year or two ago, I'm like, why would you do it this way? So now I'm like, I'm going to run this and see if it makes sense. So far though, I got destroyed in the option. I think I covered it in my last video because I had a put on QQQ when it got wrecked like 2 weeks ago. In real terms, the math of these contracts can really crush you because what happened, it would take a while to get into this too much, but the VIX had calmed down a lot. So when I bought QQQ,
when you say VIX, sorry, that's the volatility index. So that's like the
part of the
pricing.
Yeah, that's part of the pricing of these contracts. So the VIX had calmed down, which affects the delta, which is another friggin' part of option pricing. Delta is like the percentage chance, let's say, of it expiring, right, in the money. So when I bought the last QQQ VIX had calmed down. So my 30 delta, which is like 30% chance of hitting, I didn't have a lot of wiggle room with the QQQ price and the strike price where it was like $8 difference. If the volatility goes up, you get more of a buffer, right? That 30 delta, you can get a bigger gap between what QQQ is and the option you're buying. This might be confusing. It's confusing to me. That's why I'm running an experiment. And if someone should do this, you'll get it. This was like a perfect storm of it's a perfect storm of what can happen when these things go wrong. So when the market fell with the VIX being so low, if I had had real money, I would have lost $16,000 doing this wheel. So I want to try and show in this experiment, this is not free income. These contracts can go very wrong.
And I
think people are not understanding what they're buying. When I see videos online, I think they're misrepresenting what these option contracts are to some degree.
And the thing with options contracts, I'll add, is that every single one has an expiration date on it. So you have to be right on two accounts. You are betting on direction, price direction, and time. So the price has to go in the right direction by a certain time to be profitable on it. That's if you're buying. But I mean, so when you sell a covered call, you can do it in a way where there's no chance of losing money, but you will be capped on your upside. So I always say that, when I was selling covered calls on PepsiCo, if all of a sudden they found out that one of their ingredients cured cancer and I had a covered call with a strike of, I don't know, we'll say $175, and all of a sudden the next day it was at $500 a share, guess what? I'm getting $175 a share on 100 shares. Like you said, nothing is free in the stock market. There's no free lunch. There's always something that you have to be concerned about. Even if you're buying treasury bills, right? You still have inflation risk with them. I mean, there's always some kind of risk.
Now, I want to pivot this slightly. So I lose $16,000 on the 3 QQQ puts I sold like a month ago, right? So now it's like, what do I do? So the way I'm running this experiment, I have to keep the premium in the account to get back to 200,000. So I'm trying to keep my balance. Think about this. If I was yield max, I would have to keep paying me, even though I lost 16,000 of the account. If you think
and that's where yield max starts with their return of capital, right? They start giving you your own money back in order to keep that yield.
So I lost.
I understand.
I would still have to pay myself if I was running this like yield max, and the fund, the account would keep deteriorating. So this is kind of for the wheel, and I want to also show the yield max people how wrong and idiotic those funds are.
Hey, dude, anybody can do this. I'm telling you, and I did a video on it, but if you look from inception, and I've had people say, oh, you don't know how to use yield max. You don't buy at inception. And like, you buy high and sell low. I'm like, Or no, that's what people do. No, they say you buy low and sell high, and you just keep doing it over and over. I'm like, okay, that's simple, huh? Just buy at the exact bottom and sell at the exact top. Got it, no problem. But yeah, with yield max, if you look at any of the reference assets like Tesla, Nvidia, if you would have just bought the stock that some of don't even pay a dividend like Tesla at the time I looked at this, if you would have just bought Tesla shares, you would have more money on paper than with the total return, meaning receiving the distributions from TSLY, which is the reference asset. So, and I think I did all the yield max funds, and only like maybe 4 or 5 of them had some sort of gain, total return gain on the reference asset. I was just like, this is just dumb. Just buy that reference asset. Buy Coinbase. Don't buy CONY. Like, we've solved yield max, destroyed them, and I guess I'll start landing the plane. But I want to do it in a fun way, Dan. So you got your YouTube channel. What are you excited about? What's something that you're looking forward to in the near future?
Some of my accounts I went to cash actually in mid-February. I'm kind of like waiting out the storm of what will come with the budget and Trump. Keeping my eye on defense investing, and I'm very interested this is I'm kind of thinking about investing in volatility as an idea with Trump. I've been thinking about this since January, just because I feel like when something crazy will happen with Trump, which will incur, the VIX skyrockets, and you've seen it probably I think twice since he came in. When it spiked on that February cut, when everything went tanked, the VIX went up to 29. So I bought. Do you know SFOL?
The SFOL. I've heard of it. Yeah, it's
Okay.
Explain it, because I'm gonna
It
do
makes
a terrible job.
it makes credit bets against the VIX. So it benefits from the VIX going down. So I was like, okay, I'm gonna wait for a spike in the VIX, and then I'm gonna buy some SFOL for distributions. So I did buy some VIX like 2 weeks ago.
And that's ticker VIX, right?
Yeah, or no, SFOL.
Oh, SFOL. I got you.
Yeah, I've been trying to look for like a volatility index to maybe look at when if things settle down, just waiting for the next time Trump does something nuts this year.
Oh, just go ultra leveraged. Go ultra leveraged. UVXY. Ultra. I think it's like 2 or 3 times leverage to the VIX. So have fun with that one. I got into that one when I first started this and didn't know what I was doing, and it was a hell of a ride, man. I got out with a small gain, but there was periods there where I was down, and then people told me like, oh no, you buy this for like intraday trading. I was like, oh, I'm gonna buy it and hold it for a year. Yeah, it was a wild ride.
It's tough to pick individual stocks right now because you just you'll listen to the calls and it's like management doesn't know what to tell you, right?
Yeah,
they're like, we can't even predict tariffs because they keep changing, so they can't even do estimates for tariff costs. They'll say, well, maybe it'll affect us, maybe it won't. It's just this uncertainty and doubt with what's going on. And when you see a company go down, is it really a dip? Should you be buying it? Because things can get much worse from here. They really haven't cut the government spending yet. All the stuff Elon's doing has not cut the spending. So that's still something that could happen. This is a weird time. So kind of playing defense.
Well, they say, some of the most volatile times are when some fortunes are built, when people can see just those, as Warren said, those fat pitches. You don't have to swing. You can just, but it's his baseball analogy. You can just stand in the batter's box for days, months, years. Just wait, just pitch, let pitch by pitch go until you see that one that, I guess like I did, and I didn't go heavy enough during COVID time when I was buying ExxonMobil in the 30s and $40 area. Yeah. And I didn't get enough shares, but those are what they're talking about. McDonald's at $150. That was silly. I should have bought more than I have now, but hey, and there you go. Bringing it back to what you said. You were in McDonald's in the teens. So you got your YouTube channel. We are certain. The market is uncertain about tariffs and where it's going, but we're certain about you and your YouTube channel. So tell us, Dan, where can everyone reach you? When do you record? When do you drop stuff? How's that all shaking out?
I try and do I used to be in a schedule where I was doing a video and a live stream every week. Maybe I'll try and do better with doing that every week. I tweet. I have a Twitter account.
Okay. Well, I'll put links to all that below.
I'm in Ryan's Discord, and who else? Capital Mindset. Strongman Personal Finance has a Discord I mod for him. So
busy.
Yeah. I mod a lot of groups. I could spend an hour talking about that. I don't think Ryan gets a lot of it necessarily. There's other groups that are much more just hostile, and lots of interesting people in finance Discord. So
Yeah. Well, hey, a lot of anonymous people can just throw shit and, they don't have to worry, right? When you don't,
Mhm.
that's why I tell people, I'm like, okay, what's your government name? Come at me with your government name. Until you
Yeah.
do that, I'm not even going to really pay much attention to what you're saying. So, unless they're using facts, I do like facts. So, if it's something that's constructive, have at it. But
Mhm.
when people are just throwing shade, whatever. But we won't throw shade at you, man. I will direct everybody to go to your channel that's watching. Just subscribe, check out Dan's stuff, and we'll follow you on your wheel experiment strategy. And I don't know, we'll keep up. So, is there anything that you want to say, or you think we should have covered that we didn't talk about?
No, I look forward to your SCHD breakdown. I saw it come up on YouTube. I'm like, oh shit, I got to make sure I watch that. So I haven't
Yeah.
seen what they've changed. I don't own SCHD, but I like to follow it. So
And we're done with you. So it's like a sacrilege, and people that are, quote unquote dividend investors, you have to own
well, I
SCHD.
have a different. I have a DL. I have a Wisdom Tree version dividend fund. So
What's that ticker?
there's DLN is like their just 300 of the biggest companies in America to pay dividends, and then DHS is like the higher yield version of it, which I started this year because it's more value companies. I like Wisdom Tree. I don't know. I like their methodology a bit more than SCHD. I'm not trying to start a fight here. I think it's fine.
Oh,
But
dude, now
I
that's
think SCHD has an over reliance on regional banks to
you
pump
got
up
your
their
next
yield.
you got your next video, man. You can you could do don't buy SCHD, buy
I
this
did
dot
do a
dot dot.
I did do an ETF review of it like a year ago. I said it's fine. I think it's fine. I just
Yeah. You got to title it better, man. Give people some emotion where you create that loop in their
I
brain
know.
and they're like, "What? I got to click to find out what this is."
Say it's trash, click to know more or something. I'm not good at the clickbait stuff, but
Yeah. Text me. We'll work on it. You toe the line sometimes of clickbait. So,
mhm.
all right. Well, we're at time. Yeah. So, anyway, everybody, dude, thanks for coming on. Thanks for watching, and we'll talk again. Now we got content for another conversation. So, Dan, any last words before we go?
Stay safe out there, people.
Well said. All right, everybody. See you in the next video.